What's up, investors? Ken here from the Dyslexic Investor, and today we're going to be looking at Netflix. So they have earnings coming out actually on Tuesday, which is the 21st of January. So I get a lot of people asking me on what do I expect for this earnings with the competition of Disney Plus and so forth. So I found a pretty interesting article here on Market Watch, which is to whoever watch. I just like to pick out the data. You can kind of see here, so the Peacock service, which is the Comcast customers, I think its service is coming out on the 15th of April. Then we have the AT&T coming out, which is HBO Max. We had the Disney Plus come out. We had all these other streaming services coming out. Of course, you have Amazon already and things like that. So Wall Street is saying, like, yeah, Netflix can compete. That's what Goldman Sachs is saying. But Netflix's price target is still much higher than where it is today. So they're saying 450 is their price target. But again, these are some projections if everything goes well and so forth. Netflix needs to its content is king, and this part right here was quite mind-blowing on how Netflix operates. So the recent award scenarios the Golden Globes, or I forget what it's called, they had multiple different nominees for a lot of great pictures and things like that, which is kind of shows what they're spending. So last year they spent 15.3 billion, if it's a B with a billion, in 2019 on content. Okay, this year they're gonna be adding another 2 billion to content. And the funny thing is like, I don't know if anyone all has streaming stuff, but I just logged on to my streaming services and I watched Don't F with Cats. It was a little bit long-winded, but it was a great series. The Witcher, The Two Popes, a lot of murder stuff has been going on. But if you can see here on the very top of each of the things, the top left-hand side, it's all the Netflix content. So what's popular on Netflix right now? Out of the 5 things I see right now, one that they don't own but is owned by NBC is Parks and Rec. So I keep on scrolling. Inception, Netflix, a documentary about vegans and vegetarians, Netflix, movie, Netflix, Disney owns National Geographic, Netflix, crappy movie, okay movie, and then Netflix, Matrix, fantastic, another Netflix series, and then don't know who owns this, but then you get a couple documentaries and more Netflix. So basically the key I want to say is Netflix just owns so much right now, on the sense of their content is king. So having a big book of business and the book of making content that everyone wants to watch is key for their success. It's also on the subscribers and so forth. They have a much bigger lead time than a lot of other companies, like the Disney Plus, the Comcast that's coming out. A lot of these users already have huge people they can just hand it to. Like for Disney, Disney just gave it to Verizon individuals, and they already have people on Hulu and ESPN, and they just bundle it together. Comcast can do the same of like, oh, you're buying this internet package from us, bada bing, bada bang, you got the Peacock service for a year, and so forth. Like the able to reach the customers can be substantially faster, so they're going to get millions initially, and then growing from that will be that their issue, but they can easily get 15, 20, 30 million people within the first year of launching. I forget how much Disney Plus. Let's see how much Disney Plus users. Disney Plus users. I should probably call it subscriptions. They had 10 million like the first day, and then it kind of went up from there. They're saying on a $100 million company, we could basically have to wait until like the first quarter to come out and see how Disney Plus did. But initially, the first day, and a lot of it's just old stuff we've already seen. Yes, they added the Mandalorian and things like that, but it's stuff. It's 10 million. That's a lot of subscribers right off the bat. That being said, let's go ahead and jump into the Netflix chart and what it's telling us here. So it's kind of lacking. It has made a rebound late in December. You kind of see here the last quarter was kind of it went up and then kind of sold off, and then the quarter before that's the one where everyone was saying the competition is just going to be fierce for them. This is where it literally hit their high and it hasn't really recovered from there. We're way past like the 50% percentile, and we're close to the potential of breaking out again, but this is going to be another headwind of this quarter coming up on basically this coming Tuesday is going to be an issue potentially for Netflix if they can show and convince Wall Street investors that, hey, we are the premium content delivery service, we have great content, please don't worry about our subscriber growth. We are still growing. We're going to expand in other countries. We're doing a lot of different content in different languages and so forth. So the fundamental story is great. But then when you start seeing little holes in the story of like all the competition coming in. Let's go. Let's do a daily here. It's in a nice uptrend, but again, this earnings could really put a different spin on it, because it really is tied to like how Apple was on how many phones they can sell. This is how many subscribers have they added, have they expanded margin, are they actually able to, when they're spending $15-16 billion on content, what's the ROI, what's the return on investment on that? And this is where a lot of people want to see that, is not want to throw dead money into this. So let's go to the weekly chart. Volume overall is somewhat normal, which is, where did it go? Right here. It's been very normal, honestly. Nothing has been broken out above average ever since its last earnings. You can see the biggest spikes are always around earnings for Netflix, like unless there was something that came out about the Disney Plus a year's past. So let's go ahead and look on a weekly chart here. I have this down here way back when they had a huge gap fill, and I always had, when this was coming down, I wanted to buy Netflix at this level, but I never got the price. So let's go ahead and remove that. You do see I have a little price target up here. I need it to break through here to even, for myself, again, these are just my opinions on looking at investing or trading it as well. This could be potential short up here, to be quite honest, depending on how it gets there. And because this is very choppy, hasn't been able to break out of this for quite some time, and basically hitting a top in June, what is that, 18. So 2018 is basically where they hit their all-time high, and ever since then we've been plus or minus 80 points from there. This is quite significant because it was on a quite monstrous run. You can see this beautiful trend of just holding this line, which is the 21, which we like to use. Exponential moving average kind of broke down the 21 cross. That's not too good. Came back up, made a nice recovery, and then it's just been getting hit by bad news. A lot of skeptics, a lot of people are saying that Netflix runs over. It's been the great stock of the past decade, but going to 2020, there's just too much competition coming in, and we're fearful of investing heavily into this. That being said, looking at the charts, it's going to be difficult to look at because the last three earnings, two of them have gone down pretty drastically, and the one was okay, but then coming off and consolidating. That it is worrisome on my part. I would not want to be trading options into this. But that being said, anything could happen. And looking forward, again, earnings is a complete... They can come out with great revenue and great earnings per share, but once Reed Hastings, the CEO, says something about like, oh, there might be a little competition coming in, or the wordage or guidance moving forward, that's what I've seen a lot with this stock move of like, yeah, waiting for the numbers to come out, but wait until the conference call, because the conference call is where it's going to be a lot of the words that Netflix uses and things like that. It can kind of get skewed, or to kind of dig into that kind of understanding of where management and the company sees it heading. On the RSI, it's basically trading in the middle, which is fair value stock. Chaikin money flow is slightly up, meaning that firms are buying it. Momentum is stagnant, kind of going sideways, which is kind of could be building a nice little cup and handle here on the weekly chart. Would like to have this build out a little bit longer. My fear is that we could have a repeat of this past quarter, or the 2 quarters ago on in July here. This is July like 15th-ish. We had a huge gap down. The 34 or 89, sorry, 89 on the weekly chart caught it, but then kind of sold off. Continue. Oh, Overwatch is ready to play. Thank you. The overall trend is higher, but it needs to break some key points here for myself. It's above the 21, and on the daily chart, it's just breaking above the 200 simple day moving average, and it's had a pretty good stagnant support going here. Even it kind of sold off into the end of the year, kind of hit that 200 and kind of bounced back. So that shows that's pretty good. That being said, it is kind of consolidating. The candles are getting a lot shorter. It is holding the 5 and the 8 exponential moving averages in the short term. Momentum is slightly stagnant on the daily, but you see a lot of people are selling it into to the Chaikin money flow there. Looking over just at the overall chart layout, you can kind of see it kind of coming down. I don't want to draw the trend line to this, because it's not going to be the most accurate, because there won't be any other tops up here to kind of compare it to. I just want to kind of compare it to the low here. So since it's coming out Tuesday, we can actually look up what the potential move could be. So we just go to the trade tab here, and then we're going to go find the nearest term. So they're saying by the 24th of January, it's going to be plus or minus 25 bucks. All right, so 25 bucks. So 25 bucks from here, let's call it 340. So it'll be 365. So it could be all the way up here by next week's end. So it can be up here or down 25 bucks. So that's going to be 30, 28, so right about here. So that would line up with the 200 exponential moving average, which I kind of like that. All the moving averages are breaking through. If it does come down to the 200, this would be a nice buying opportunity, in the sense of if you want to go long something. Again, I think that in the short term, it might be hitting some potholes with the competition coming out. But what a lot of people are finding out is Netflix is still the content king. All the shows that you want to watch, your Stranger Things, your the new show, what I just talked about, Don't F with Cats, like these documentaries, and a smorgasbord of other show like Lost in Space I just watched. Things like that is going to be you have to watch that on Netflix, because it's Netflix original content. So I'm just going to be watching this. I won't be trading this until the next earnings, so past Tuesday, and I'll put an update on the video here on what I decide to do or don't do. Again, guys, thank you so much for watching. Don't forget to like and subscribe. This is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side. Peace.